Greetings everyone, and welcome to our first price action based technical analysis video for the month of March. I hope you are all having a fantastic start to the new month, and today we are diving back into the XAUUSD chart as we analyze the latest developments following last week's trading activities. Despite encountering a choppy market condition during the first half of the week, we managed to capitalize on a last-minute bullish surge, securing over 600 pips in profit from multiple buy entries. And for educational purposes, if you missed out on our daily commentary, you can catch up via the link provided in the description box below, or by clicking the link at the top right hand corner of your screen if you are watching on my YouTube channel. In light of the recent US macroeconomic data releases and speeches from Fed Reserve officials, we witnessed a remarkable uptick in gold prices, soaring to the $2,080 zone. This surge was fueled by a decline in US Treasury bond yield as market sentiment shifts towards potential rate cuts happening sooner than expected. Despite the robustness and growth of the US economy, the latest ISM Manufacturing PMI report indicated a continued contraction in the US manufacturing sector. In light of this recent development, how is the gold asset faring in the current market landscape? As always, we will be dissecting the current market structure from both technical and fundamental perspective, utilizing our basic tools such as the economic calendar, trend lines, key levels, and chart patterns to decipher potential price movements in the coming week. Before we proceed, it's important to reiterate that this video is intended for educational purposes only and should not be considered financial advice. While our aim is to enhance your understanding of price action analysis, it's crucial to acknowledge the inherent risk associated with Forex trading. Exercise caution and consider seeking guidance from a qualified financial advisor before making any investment decisions. With the groundwork laid, let's now dive into the detailed analysis. So as usual, our first point of contact is going to be on the daily time frame, where I have an interesting trading setup that we will be using to understand the behavioral patterns of market participants in this environment. Now, what I did here on the daily time frame was to take into consideration the nature of price action since the year 2020. And of course, you know that we are at an all-time high zone, and it's very important for us to relate the current zone with what has happened in the past. And if you do that appropriately, you will see how the $2,080 level holds some significant importance at this juncture. Now, looking at what has been going on here, if you look at what happened here in the month of August 2020, you saw how that area was serving as a selling niche. Now, fast forward to 2022 March, this area was also serving as a selling niche. Now, look at what happened here in the month of May of 2023. We saw as soon as price got into that level, we saw another formidable resistance from the sellers pushing price to the downside. And in fact, in the last three months or so, the same area had continued to serve as a barrier for buyers, as you will see here. And during the course of last week's trading session, we saw that phenomenal growth in price, leading into a situation where price closed just exactly around that area. Now, with the information we have gathered here, you will see how this zone had played a major role in pushing price to the downside. Now, as a result of this observation, we are going to be using that level as our key level for this week. And of course, you know how we use our key levels in this community. As long as price action remains above the key level, we want to be looking out for patterns and structures that support the idea of buying the asset. But if price drops below and continued selling pressure persists below the structure, we obviously want to be looking out for selling opportunities. Now, in addition to that key level, you will see that since the month of June, July, August of last year, it's quite obvious that price action has been finding higher highs and higher lows, and this has resulted into an ascending channel to buttress the strength of the buyers in this market. Now, if we connect a series of higher highs since the month of May, we have the resistant line of that range, of that ascending channel, and if we connect the series of higher lows, we have the support line of the ascending channel. Now, looking at what happened last week, you will see, let me zoom in so we can see things clearly. Price action did break out of this descending trend line, which was supporting the bearish momentum since the beginning of this year, to give us a strong bullish move. And as price is back into that important $2,080 level, the question at this juncture is, how will market participants react to this level? Are we going to see continued selling pressure like it has done in the past to retest this descending trend line that was broken, maybe in anticipation of an uptrend continuation? Or are we going to see an uptrend continuation pattern happen around the 2080 that will incite the uptrend move to the upside? So you would agree with me that we are at a crucial juncture in this market where, depending on how market participant reacts to the structure, will determine what our next line of action will be. Now, to guide our decisions going forward, I have a simple trading setup on the 4 hours time frame, which will help us to strategically position ourselves for the next move. Now, before we scale down into the 4 hours time frame, it's important for us to keep tabs with the fundamental factors that will be influencing the market sentiment in the coming week. And by monitoring the economic calendar, we aim to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, giving us valuable information and timing to position ourselves in such a way that we can capitalize on the next potential move. Now, based on this asset we are looking at for this week, we will be focusing on economic features from the United States economic docket. Now, looking at this economic calendar here, the first high impactful event is coming in on Tuesday, that is March 5th, and this is the ISM Services PMI. Now, for those who do not know, this is a key economic indicator that measures the performance and expectations of the service sector in the United States. And of course, a higher than expected data typically signals economic expansion, boosting market sentiment, while a lower than expected reading may indicate contraction. Now, fast forward to Wednesday, March 6th, we are looking at the ADP employment change, which is a monthly economic report that provides an estimate of the change in non-farm private employment in the United States. Then on that same Wednesday, Wednesday and Thursday to be precise, we are looking forward to the first chair Powell testifies. This is an event where the Fed chair testifies before Congress, providing a broader overview of the economy and monetary policy. His remarks are published ahead of the appearance on Capitol Hill, so everyone in the market will definitely be scrutinizing his narrative to have an idea of the Fed's monetary policy cycle for the year 2024. Then fast forward to Friday, March 8th, we're looking at the average hourly earnings, which represents the average amount earned per hour by private sector employees in the United States and is a crucial labor market indicator. Now, on Friday, we will be looking forward to almighty non-farm payroll, which is considered to be also a key economic indicator that measures the total number of paid U.S. workers, excluding farm employees, government employees, and non-profit organization employees. So, NFP is considered a high-impact event because it provides insight into the overall health of the labor market as a substantial impact on market sentiment. So these are the high impactful events we're looking forward to this week, and of course we do understand that the anticipation of this event as a way of influencing the behavioral patterns of market participants, which of course will reflect on the chart as price action. Now, talking about price action, let's scale down into the 4 hours time frame, where I did have a simple setup to guide our decisions going forward. So right here on the 4 hours time frame, what I did was to take into consideration the nature of price action since the beginning of the month of February. So that's about an historical data of 4 to 5 weeks. So our key level still remains very intact at the $2,080 mark, as you will see right there. And you will see that throughout the second half of the month of February, that is the last 2-3 weeks, price action had consistently found higher highs and higher lows. Now, this has resulted into this ascending channel we have here. So connecting the series of higher lows, we have the support line, and then connecting the series of higher highs, we have the resistance line of that channel. Now, if you look at this closely, right on Friday, we saw our price broke out of that resistance line of that ascending channel to further emphasize the strength of the buyers. Now, technically, what we are going to be doing at the beginning of the week is to try and see how the market participant will react to the zone around the $2,088 and the $2,080 zone to decide what we will be doing next. Are we going to see a situation where price is going to come back to retest the resistance line of the ascending channel that was broken in an attempt to continue the uptrend, or will price drop into somewhere around the 2055 level before the uptrend scenario happen? And if we look at that, we are looking at a minimum of 120 pips to a maximum of about 230 pips thereabout before an uptrend continuation happens. But if the contrary happens here, where price action consolidates for a while, it's a possibility, and transition into an uptrend continuation pattern before the breakout of the $2,088 level, will welcome more opportunities to join the uptrend move. So you can see we're at a very crucial juncture. So we are going to be using the setup here to guide our trading decisions for next week. And trust me, I will be with you in the comment section after monitoring how participants in the market will be reacting to the structure, after which I will be giving you an update on what I think is going to be happening from that moment. If you have found this content helpful and useful in making your independent trading decision for the week, I would greatly appreciate your support by giving the video a thumbs up. Your likes are valuable to me and helps the algorithm promote the video to a wider audience of traders who may find the material beneficial. Thank you in advance for doing so. If you haven't already, I encourage you to follow me on this channel for more of this content. By subscribing, you will always stay updated with the latest ideas I share and receive notifications whenever I upload new videos and commentaries. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye.